Hey YouTube, welcome to Personal Financeology, where I talk about your personal finances and technology, how the two can be combined. On today's video, what I would like to talk about and possibly create would be a series of tips, suggestions, and advice on something that is near and dear to myself. I'm talking about student loans. Whether you're young, old, a lot of us have student loan debt. And the first piece of advice that I can give to you is with student loan debt, if you're on an IDR payment plan and your payment is $0 a month, this is not ideal. However, you have to look at the silver lining because the interest does not compound. It's simple interest, and essentially at the end of the year, the interest will be about the average of the rate of inflation. Now, is this the best circumstances for you financially? No, it's not, but it's also not the worst case scenario. That is tip number one right there. The second piece of advice that I can offer is pay weekly, and be sure to notify, whether it's online or by calling your lender and notifying them that when you make an extra payment, you don't want it to be applied to the future payments. You want that extra payment going towards your principal and not interest. You want to pay this loan down as quickly as possible. What I do, for example, I have Navient. They're a spin-off of Sallie Mae. And my payment is $50 and some change per month. Now, is that a big deal? No, not really. And at the moment, I am working on other debts, and this is something that I just pay the minimum on. I may pay a little extra, but budgeting purposes, paying weekly can help you versus paying monthly, especially if your payment is higher than what I am at. Adjusting to a weekly payment plan could be something that would be beneficial, and the reason it's beneficial is because rather than paying once a month, making 12 payments for your total, you're actually making a total of 52 payments because there's 52 weeks in a year. And technically, you'll pay more of your loan down by doing it this way, and it also doesn't affect your budgeting as much as if you just try to do it monthly. Plus, when you pay weekly, you're reducing the interest because, unfortunately, at least with Navient, my interest does accrue daily, and this is not ideal. So if I could make a payment actually every day, that would be better, but I'm not making payments every single day. That would be way too time consuming, and setting up automatic weekly payments has been much easier. If you have a federal student loan, and I am not talking about private loans from Bank of America or wherever you may have acquired those loans from. When you have a federal loan, you have an obligation to pay that debt. You cannot declare it in bankruptcy. Few have, but it's very difficult to get those loans dismissed in bankruptcy. You might as well suck it up, make the payments. One way to save some money is sign up for the automatic payment. Typically, most lenders, but as a borrower, you will save 0.25% because the lender is giving you that discount by knowing that they have access to withdraw the money. Now, yes, you need to make sure the payment goes through because ultimately it's your responsibility if it doesn't go through for some reason, and just pay attention to your loans. This does not mean that you should put it on autopilot, but pay attention and take advantage of that 0.25% decrease of interest, because yes, it will save you a fraction of money, but over the long term it could end up adding up. The reason I suggest doing what I just said is because if you choose to not pay and you default on a federal loan, it does not matter. They will get their money, and the ways that they will acquire that money: one, you're probably going to suffer penalties, late payments, etc. Not good. Second, your credit will be destroyed. And your credit may already be destroyed, so your credit score may not even be the concern. Where it comes into play is what the government's going to do is maybe one of two or two of two. They will garnish your wages. They can also withhold your tax refund and apply that to paying off your loan. If you have a significant size loan and it goes into the point where you retire and you decide to take Social Security out because you've paid into it for working over the course of 40 plus years, they will also take that money too. Please pay the federal loans that you have. Do the best that you can. If you can't make the payments, call the lender and communicate. Always do what you can. If you can pay more, do that. Now, one last suggestion that I have is if you have other debt, such as, for example, credit card debt, and it's over 20%. Let's say you have a 23.99% credit card, and you have money that is not paid off on that. It is more beneficial for you to pay the minimum on your student loan, get the debt paid off on that credit card, then take the money that you were using to pay the credit card and take that and put that towards the student loan. However, if you have a small balance of a student loan and you just want to be done with it, there's no problem with paying it off in full if you have the money to do so and it's not going to hurt you financially where you can't make your next month's rent or your next month's mortgage, whatever it may be. Make sure you're able to afford it, and then when you do so, continue to pretend that you have that payment. Take that and apply that to your next loan. That's called a snowball method. If you find this information beneficial, I know it's very simple information, but a lot of people just don't want to face reality, and it can be scary. But you need to be educated. Take control of your finances, especially your student loan finances. Thank you for watching. If you haven't already, please click on the subscribe option. I would greatly appreciate that. Give the video a thumbs up. And if you have any other advice or questions, please put that in the comments below. Again, my name is Kris with Personal Financeology, and I appreciate you watching. Have a wonderful day, and good luck with your student loans.